What's cracking, investors? I got a fun one today. I just received my dividends. They came in from both of my funds, and I want to do a little math exercise just to figure out the future here if things go as they are. So, diving into the account, I received my dividends from Realty Income and Main Street Capital. So 121.02 and $231.83, which would make $353.85 per month. So that's a monthly dividend from these two funds. It's not the entire account, right? I'll go into the entire account so you can see what it looks like. Sitting at 141,000 at the moment. I've got lots of cash, so 37,000. Well, lots for me anyways. It's a proportion of the account. 37,000, and then a little bit of interest that's going to come in due for currently $59. Holding 200 shares of Apple, which only pays out a dividend quarterly, so it's not going to be reflected this month. And then I've started to build a position of JD. I also have, with 5 shares, huge position. I also started a couple of short-term calls and calls there in case there is a short-term rebound. Sorry, I can English. Short-term rebound in the markets. A call on JD, call on AG, just in case the silver market breaks out for some reason. Since we broke through the $2,000 resistance on gold decisively, I'm figuring that maybe silver would like to follow. But we'll see if that breakout persists. Now, let's go back into the dividend discussion. $353. So what I did was I decided to take that money, take those investments in Main Street Capital and Realty Income, and figure out, okay, what would it look like in 20 years, in 5 years, in 10 years, in 20 years, if I just let it run, if I just let the monthly dividends reinvest and let it run for 20 years, how much money would I be getting per month from those investments? So I ran it through some calculators. First, before I entered the data, I looked up, this is Main Street Capital. This is not right. Dividend growth average is probably closer to this number down here, 4.65%. So that's what I used. And the dividend is also not correct here. This is too high. Dividend yield, to get that number, I went into my account and I looked it up right here. So dividend yield of 6.58%. That's what I used. So I plugged it into this calculator here, and here it is. It tracks my yield on cost as well. So I input the shares, 1040 shares, 1,040 shares at a cost of 37.32. Entered all the data, total investment of 38,800, and I let it run. And so here are the numbers. So after 1 year, I would have gotten $2,690, $2,691 almost, and a yield on my initial cost of almost 7%, 6.93. Now, if you're on the phone, you're probably not going to see this very well. You might be able to, actually. The numbers are pretty clear. But in the computer, definitely you'll be able to see it. The video should be uploading in HD 1080 at least. Now, under the second year, I'm now going to be getting, if I just keep reinvesting the dividends, $3,000 per year. Okay, so we're approaching, pretty good money here, and a really good yield on cost of 7.78. That's great. On a third year, the numbers are looking even greater, $3,400 a year, and a yield on cost of 8.75. Now we're talking. This is some real yields, all right? Let's skip to 5 years. We're now sitting at 4,300, yield on cost at 11%. Skip ahead at 10 years, and this is when the party starts happening, right? In 10 years, $8,626 per year. That's not bad, right? It's like $800 a month or something, or more. 22.23 yield on cost of just sitting, okay, in this fund. If things are able to hold as they have been in the past with this company, I know you're not supposed to, extrapolate like that because nothing is for sure thing. But this fund has been holding steady for a while, and there's no reason to believe that it wouldn't be able to manage to do so in the future as well. So let's skip to the 15-year mark and see some real money rolling in now. We're looking at $20,000 almost per year. That's like a full, low wage salary. Just if I just let it run for 15 years and just not touch it. That's pretty good. I don't know if I'll be able to do that. Hopefully I'll add to that position, but if I don't, this is what I can expect. 49.6% yield on cost at the 15-year mark. And at retirement, I plan to be fully retired by 60, that's for sure. I'm 39 now, if you don't know. So by 60, I plan to be fully retired, hopefully, if everything goes well in my life. And look at the salary that I'll be getting from this investment alone. $50,000 per year. If I just don't do anything for 20 years and don't spend that money down and everything goes well with the fund, collecting a yield on cost of 128%. Whoa, come on. That's crazy. Now, Realty income was not as impressive, but we're going to go through the numbers anyways. $50K from this fund, that's great. But if I let Realty income run without adding any more shares or anything like that, first I went into the stockanalysis.com to find out some more detail. You can see that dividend growth is about 3.68% per year. The dividend itself I got from Robinhood, so I'm not going to get it from that site, just to get the real one here from my account. It's 4.92. Let's see if it's close. Yeah, 4.92 is the exact same one on stock analysis, so that's fine. So I entered that data, and here we go. 486 shares with a stock cost of 60.86 per share. Total investments of almost $30,000, yield of 4.92, blah, blah, blah. So here's what happens after the first year. $1,500, not bad. $1,600 for the next year. Year 3, that's $1,800 with a yield on cost of 6.11. That's reasonable. After 4 years, it looks a lot more reasonable. $2,000 per year, or 6.7%. Let's skip ahead. Actually, let's go 5 years. That's a little bit over 10,000. I'm sorry, a little bit over 2,000 and it's 2,174 with a yield cost of 7.35. Skipping ahead to year 10, only $3,600 per year with the yield of 12%. Yield is great, but it's not going to be a lot of money in year 10. I'm going to have to go fast forward all the way to year 20 to figure out if I'm going to be getting some decent return, and it looks like it's not bad. So almost $12,000 per year. So that's on top of the other 50, hopefully, if that fund survives. So that'd be 62,000 total income if I just let this ride. And yield on cost would be 40.48, which is really good yield for my initial cost. So the monthly reinvestment really helps. I do have a feeling, though, I don't know exactly how they operate, but I do have a feeling that all they do really is just they do a quarterly dividend like anybody else and just break it down into 3 different payments per month. Like, I might be wrong about that. I don't know exactly how the details work. If you do know, please leave a comment in the section to enlighten us all. But it seems the reason I think that is because they always do their dividend increase at quarterly events, not like at random times during the month. You know what I mean? So it just makes me think that they're just quarterly split by 3, which is I'm totally fine with. But that's how the monthly compounding works, and it's pretty cool to see on a chart, on a calculator, to see how it grows. Definitely Main Street Capital has the edge, but it's also got a little bit more uncertainty just because of the nature of the business. You know, it's more of a kind of a loan-ish business to mid-sized businesses, and whereas Realty Income has got commercial properties of very, very stable leases that increase very slowly over time. So, you know, you're trading a little bit exponential growth for safety. Hopefully, the plan is to contribute to those two funds and to be able to have other investments as well in the account. So by year 20, this account looks a lot bigger than this right now. I've managed to grow it a little bit. If you go to the browser here, so far 4 years of doing this. Now I gotta fill you in on a lot of details, so this chart is not going to be extremely accurate, but the shape of it is accurate, but the numbers are a little off, and I may have a discussion as to why at some point. I just don't want to do it right now. So I started in 2018, April 28 or something like that, 2018. I'm sorry, August 28, 2018, somewhere around here. That's why it looked so flat before, because there wasn't any money. And then this is kind of what's been happening. This is the March lows here. That's why it's negative. I didn't go that far down to 15. It's because I put money in and then I put money out at various time periods, like over here through 2020, 21. I put some money now, and then I took out 42,000 to make it into original 30,000, somewhere around there, at about zero cost, zero gain. So I try to make it fair, but the account wasn't at 15,000 here in March lows. But anyway, this is kind of what's been happening to the account over the last 4 years. So hopefully I'm able to grow it. I was pretty aggressive in order to grow it this far, so I might become a little more conservative now. But I'm still, playing with options a little bit. I'm selling options here and there and reinvesting dividends. I'm making plays. I'm trying to buy JD at a low here and see what happens. This is the 5-year chart. It's been on a down tear for a very long time. It probably will continue, but I'm not going to buy any more over $37. But if it does drop to, like, let's say these levels here, 30, between the 30s and 20s, or even 35 and 20, I'm going to be buying some JD. I know the risks. I know it's very risky. But if you look at JD's like financial performance, I don't know if I'll be able to find it actually on stockandalasset.com. But I mean, if this is accurate, their financials, like the growth, is just incredible. Look at this. Look at this revenue growth. Who wouldn't want a piece of that? Net income, they're not focused so much on income because they're kind of like running Amazon style. They just reinvest everything. They don't really even dilute the shares much at all. So under the statistics, look at the statistics. Enterprise value 46 billion, market cap 70 billion. So they're sitting on a ton of cash. Balance sheet, look at the net cash of 23 billion. It's enormous. All right, EV to sales, you can see all the metrics here. Margins are not amazing, obviously, but I'm sure they can make them better in the future. It's just been a really tough period in the last 2 years. So the stock's been hit on the chin a little bit because they're kind of a low cost, merchant. But I'm sure they can do better, especially as they grow their market share. They actually gave out one dividend because of a sale on some stock. But other than that, I haven't seen many dividends yet. They've had I actually had 2 dividends. I guess April, May, they do dividend. That's fine. So anyways, I'm trying to play JD. We'll see if that's a good play or not. We'll find out in the future. It looks like it's up in the after hours. Let me see I'm filming this on Sunday night, so the markets are open in China right now. It looks like mildly green day for just look at the HK here, the first symbol. That's traded in Hong Kong. It's just like 1% up or something like that for Alibaba name 9988HK. .HK. So they usually travel in tandem anyways. Those two stocks, JD and Alibaba. But anyway, I thought that would be entertaining just to share what a dividend reinvestment looks like for Main Street and Realty Income. And I still have like $36,000, right? I could virtually double the investment in Realty Income or split among the two. So, the payout in 20 years is even greater. But hopefully we get that payout high enough, before the 20 years is up. I don't want to be waiting 20 years just to get a payout, so I can pay my bills. So hopefully I'm able to grow the account. But those two positions I plan to keep forever, basically, and fund my lifestyle later on when I get into my 50s or 60s. So anyways, hopefully you find that entertaining. If you got something interesting to share on the topic, please do. Or you got some Chinese stock wisdom about the VIE risks in China economies crashing and doom gloom, whatever. I want to hear about it. All right, I'm going to end it right there. Dividend reinvestment, fire style. You know who you are. Peace out.